Hello and welcome to the channel. Let's talk about Ethereum, shall we? Specifically, the big, grey regulatory elephant in the room, Ethereum ETFs. For months now, the price of ETH has been doing the crypto equivalent of treading water, occasionally dipping its toes into slightly colder or warmer patches of the pool. But then, something remarkable happened. A flurry of ETF applications hit the SEC's desk, and suddenly the water started feeling a bit electric. Now, the odds makers in the back alleys of Wall Street, probably I don't actually know where they hang out, are whispering about a very real possibility. An Ethereum ETF might actually be approved. And that, my friends, has sent a ripple of excitement and a healthy dose of fear through the entire crypto market. So, who's likely to be first against the wall when this wave of institutional money comes crashing in? Well, my money's on the scrappy younger siblings of the Ethereum family, Layer 2 solutions and DeFi protocols. See, Ethereum, bless its heart, has always been a bit of a diver. Transactions can be slow, fees can be higher than a giraffe's blood pressure during a giraffe rave, and scalability, let's just say it's not exactly Ethereum's middle name. That's where Layer 2s sashay in, all sleek and efficient, offering faster transactions and lower fees than a weekend getaway to your nan's house. We're talking about projects like Optimism and Arbitrum, the plucky upstarts trying to make Ethereum usable for us mere mortals. And then there's DeFi, the rebellious teenager of the crypto world, promising to overthrow the tyrannical reign of traditional finance with its decentralized lending, borrowing, and trading platforms. An Ethereum ETF could be like a shot of adrenaline straight to the heart of DeFi. Imagine for a moment a world where your grandma, bless her cotton socks, is using a DeFi protocol to earn passive income on her Ethereum holdings. Okay, maybe that's a bit of a stretch, but you get the point. Now let's talk about the cool kids in the blockchain cafeteria, the EVM-compatible projects. These are the ones who speak Ethereum's language, the ones who can seamlessly integrate with the Ethereum ecosystem. Think of it like this. The Ethereum ETF is like a shiny new club opening up in the city. Everyone wants in, but there's a dress code. And guess what? The dress code is EVM compatibility. Projects built on other blockchains, the ones who scoffed at Ethereum's gas fees and slow transaction speeds, they might be left out in the cold, desperately trying to convince the bouncer that their blockchain is just as good, if not better. But for those who played by Ethereum's rules, who built their projects to be EVM compatible, well, they're already holding a VIP pass. They're ready to welcome the influx of new users and capital with open arms, and maybe even a celebratory airdrop or two. So if you're looking for the next big winners in the post-ETH ETF world, keep your eyes peeled for the projects that proudly wave the EVM-compatible flag. Let's talk about the real estate moguls of the crypto world, decentralized exchanges, DEX, and lending protocols. These platforms are the backbone of the decentralized finance, DeFi ecosystem, and they stand to gain a whole lot from an Ethereum ETF. Imagine this, Wall Street gets its hands on an ETH ETF, and suddenly everyone's scrambling to get a piece of the action. But wait! Traditional exchanges are closed after hours. What's a crypto-hungry investor to do? Well, they turn to DEX, of course. These beauties never sleep, offering 24/7 access to the wild world of crypto trading. And then there are the lending protocols. They're like the cool aunt of DeFi, always ready to lend you some crypto for that impulsive NFT purchase. With an influx of institutional money, we could see these lending platforms offering even juicier interest rates, attracting even more users and liquidity. Now, for the part you've all been waiting for, the potential losers. Let's be honest, not everyone's going to be popping champagne when an Ethereum ETF drops. Some projects might find themselves on the receiving end of a good old-fashioned crypto beatdown. Take Solana, for instance. It's been dubbed the Ethereum killer, boasting faster transaction speeds and lower fees. But here's the thing, with an ETH ETF, Ethereum's weaknesses become less, well, weak. Suddenly, the institutional investors who were once enamored by Solana's speed and efficiency might start to question their life choices. They might even, dare I say it, start moving their money back to the OG smart contract platform. Finally, let's talk about the wildcards in this high-stakes game of crypto bingo ZK rollups and real-world asset RWA tokens. ZK rollups are like Ethereum's secret weapon, a technological marvel that could make Ethereum faster and cheaper than ever before. And then there are RWA tokens, the bridge between the physical and digital worlds, representing everything from real estate to stocks to fine art. An ETH ETF could be the catalyst that propels these technologies into the mainstream. Imagine a world where you can trade tokenized versions of your favorite stocks on a decentralized exchange, all backed by the security and transparency of the Ethereum blockchain. That's the future that RWA tokens promise, and an ETH ETF could be the key to unlocking it. So, there you have it. A whirlwind tour of the potential winners and losers in the post-Ethereum ETF world. Now, keep in mind, this is all just speculation. The SEC could always pull the rug out from under us, or a rogue pigeon could fly into a server farm and plunge the world into darkness. The point is, the future of crypto is about as predictable as a toddler on a sugar rush. But one thing's for sure, it's going to be a wild ride.